Welcome back for my final daily report market analysis video with me, Richard Perry, market analyst at Hantec, on Tuesday the 4th of February, looking at gold, which has now broken this uptrend. We've been hugging the uptrend really tightly for the past 2 weeks of trading. Actually, it never really got away from that uptrend, and again yesterday pulling back from an attempted rally, an attempted breakout. And now this morning, having had 2 bear candles in a row seemingly, we are breaking this uptrend. We haven't had 2 negative candles in a row since the market really started to take off in mid-Jan with the coronavirus fears growing. And that is a bit of a sign, I would say, considering that we've got these momentum indicators which are now turning into sort of corrective mode. Look at this RSI, that's below 60. Below 60 on the RSI, I think, is an important moment if that is seen on a closing basis, because not only have we got these lower highs, that would mean lower lows and actually sort of 5-week lows on the gold RSI. We've got the MACD lines. This has been a concern of mine in recent days, sliding away and now beginning to sort of pull back lower again. Look at the stochastics. Are they about to cross lower and give a bear cross sell signal? So this is a near-term move that certainly suggests that the bulls have lost control, lost an element of control, not necessarily saying it's going significantly lower. And I think on the medium-term basis, I'd be still happy above, well, 1536 to 1546. I think that is all these key lows from mid-January. As long as those remain intact, I think you're going to continue to maintain a degree of positivity about the outlook on a medium-term basis on gold. Breaking under 1536, I think the argument becomes certainly less positive on a medium-term bull run, but we're still not exceptionally bearish in that scenario. But it's just that we have certainly now lost the impetus of this rally higher on gold, and it looks like the near-term impetus or the near-term momentum is now building to the downside. You can see here on the hourly chart that uptrend breached. We've got a small top pattern, you could argue, forming with now lower highs and lower lows under 1570. 1570 arguably a basis of resistance, but you could argue also resistance coming in at 1574, 1575 area. 1580 being resistance as well here. You've got the momentum on the hourly just beginning to now turn more corrective. RSI hitting that 30 mark and breaking the uptrend. The bull arguments are now sort of being ticked off one by one. So I think it's now starting to be less positive. So initially you'd be looking at the support at 1562, that reaction low from last week's low, being the first real support of or the real higher low support of this uptrend. And if that gets broken on a closing basis, you start to build a more corrective move to the downside. So important moments for gold, and with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.